Now let's continue with Nvidia this morning. The company's value has tripled in about a year. Will investors continue to reward the AI hype with more growth? Doug Clinton, managing partner at Deepwater Asset Management, says that yes, I think so. It always sounds wise to wonder when this will end. When you look at the hockey stick you just described, it feels a little scary and looks a little scary on the chart. But in actuality, I believe we are in innings 3 or 4 of this AI bull market. The strange sort of counterintuitive reality is that while we are worried now that things might be over, they are probably not over when we stop worrying, which is when you should start worrying. Nvidia investors would be relieved to know that it's not just Deepwater Asset Management expecting the stock's rally to go on. I believe that we are still in the early stages of this bull market, as uncomfortable as that sounds and maybe feels. I think it will feel uncomfortable all the way until we get to being in a true AI bubble, which we think is kind of the culmination of this bull market. At that point, people will stop talking about valuation altogether. To put the potential $5 trillion market cap in perspective, that would equal a stock price of $2,032 before the split, or 66% above where the stock was trading when the analyst made his prediction post-split. But this would equal about $203 per share. In today's video, we're going to explore the possibilities of this happening, especially after Nvidia pulled back and Apple went up again. In fact, Louis Navellier, Chief Investment Officer of Navellier and Associates, recently said that Nvidia will soon surpass Microsoft to become the first company to reach a $5 trillion market cap. Furthermore, we will discuss whether investors should buy more Nvidia shares following the split. But before we do that, if you'd like to stay up to date on Nvidia's most recent news and the most recent developments in the stock market, subscribe to our channel Investing Tutorial. We post updates about the biggest changes and market catalysts. So click the bell icon if you don't want to miss the most recent updates. All right, back to today's video. Yes, Nvidia has quite the narrative. Their data center company was valued at $15 billion 2 years ago, but by last year it was estimated to be worth $48 billion. This year, it is expected to reach a valuation of over $100 billion. We are entering the fourth era of computing, moving toward generative AI, which will change everything we do. Every major shift in a technological paradigm always has a single leader who defines the shift, and Nvidia is that distinct leader. As long as data center spending continues, albeit at a more normal pace over the next few years, rather than at the obviously rapid pace of this year and last year, I think the company will do incredibly well. What's interesting about this is that there is the big question hanging over not just Nvidia. However, the sustainability of such in terms of growth trajectory and overall AI concept has been questioned. Jennison Associates head of global equity, Mark Barabeau. The size of the installed base of data centers is just over $1 trillion, and you know that not all of it has to convert to quote-unquote accelerated computing architectures. He says that it sounds like you believe, even if it doesn't continue quite at the same pace, that there's going to be growth in that area absolutely. But the most of it will over the course of the next few years, and Nvidia, due to its competitive edge in scale software and networking, is probably going to take the lead in market share. There are valid grounds for their current success, and given the size of the addressable market, it is difficult to discount their failure in the upcoming years. The announcement that Nvidia had surpassed iPhone manufacturer Apple in market capitalization and became the third company to cross the $3 trillion market cap milestone was one of the most significant headlines in the market recently. Even though Nvidia eventually withdrew, this sparked interest among investors and analysts regarding the race between Microsoft, Apple, and Nvidia to reach a $4 trillion market cap. An analyst now predicts that Nvidia will prevail in this race and surpass the GDP of all nations except the US and China, reaching an even higher market cap of $5 trillion before the year is out. But according to Louis Navellier, some of this growth will come from acquisitions, which will allow Nvidia to easily enter new markets. Unlike some other market experts who have already called the current state of the AI industry a bubble because of their current infrastructure and investments in AI, he thinks Nvidia, Apple, and Microsoft are in a good position to acquire smaller businesses that have innovative concepts and technology. Navellier asserts that we are still in the early stages of the AI boom and thinks that such a categorization is inaccurate. We wholeheartedly concur with him on this point, as the global AI market is expected to grow at a compound annual growth rate of 37% between 2023 and 2030. Since Nvidia leads the AI business, this may be the easiest method to benefit from the secular boom. So, should investors buy Nvidia stock now? Let's go straight into the specifics. When asked, "What do you make of this move?" Dan Niles, portfolio manager at Niles Investment Management, responded, "You have to remember there's no comparison when you look at the growth rates of the two companies, because Apple has been a massive underperformer relative to Nvidia over whatever time period you want to pick. So if you say, well, take the most recent quarter versus a year ago. Nvidia is an amazing company, no disrespect intended, but Apple's net income makes Nvidia's net income look like small time. Apple's revenue has decreased by 4%, while Nvidia's has increased by 237%. If you even look at it over a 10-year period, you'll see that Nvidia's revenues have increased by 991 compared to Apple's increase of 56. Based on that comparison, I don't think it makes sense, and there's a lot more growth ahead for Nvidia because, as we've only been in this for about a year and a half when we were consulted, Dan told us some terrible news. I know it doesn't make sense, but that's what we do in TV. We try to create things that don't make sense in order to try and make them interesting to watch. Many factors contribute to Nvidia's stock's continued strength, but the company's dedication to innovation and releasing new AI chips annually is, in my opinion, the primary one. Recently, Nvidia's CEO, Jensen Huang, revealed the company's newest AI chip architecture, called Rubin, just months after announcing the Blackwell model, which won't even ship until late 2024. Even better, Jensen canceled plans for a Blackwell Ultra chip in 2025 and the next-generation Rubin platform for 2026. Although he didn't go into great detail, the Rubin platform will employ a new type of high-bandwidth memory and ultra-fast switch, enabling even greater performance. We're on the verge of a significant change in the computing industry. According to Jensen, and Nvidia's innovations in AI and accelerated computing are pushing the envelope and spearheading the next wave of technological advancement. This illustrates how Nvidia intends to stay far ahead of competitors and maintain its leadership position in the rapidly expanding AI GPU market. In addition, Nvidia's software is equally as impressive as its hardware. In fact, the company's chips have become industry standards thanks to its Cuda software platform, which was established in 2006 and allows programmers to directly program its chips. Since most GPU programmers are familiar with the Cuda platform and how to utilize it, retraining programmers on other software platforms would take time and money. Consequently, programmers learn to program GPUs using the Cuda platform, which has greatly impacted NVDA. Programmers would probably be less productive if they had to learn many software platforms in order to combine its GPUs with Cuda. As it develops its technology, Nvidia makes it backward compatible. This means that it has complete control over the full tech stack, including the GPUs, software, and firmware updates. The ability of the company's newest technology to function with its older technology overall has allowed it to capture about 80% of the GPU market. If you watched the entire video, thank you. It takes a lot of work and time to create these, so if you enjoyed it, please hit the like button and subscribe to the channel. This helps us grow. Now that you're back to the video, is there anything useful to say? Even taking a look at our conventional metrics for determining a stock's valuation at this stage, such as PE, or choosing your own version of the price to something, like is it beneficial, according to David Newman, CEO of Futurum Group, to even consider whether or not something is expensive. Considering that you stated that it won't change for 5 years, absolutely, investors must still exercise caution in what they do. In July of 2022, when the price was around $150, I said that this might be the once-in-a-lifetime opportunity to invest in the AI movement in the companies that offered it. Later, when the price reached over 900, I released an open letter to the market saying that just because a company has had a great run doesn't mean it isn't a great one. Though it may seem like everyone is talking about AI, if you are a defensive investor and want to be in on AI, but still want to be kind of safe, then Nvidia seems to be the best option. However, the product you are talking about has a very high concentration with 5 customers, which has a big pull forward on the buying for Cuda. Every hyperscale cloud provider on the planet is looking to build their own chip, and AMD and Intel are following suit. Of course, you have margins that you have to question how sustainable are these margins. We are still very much in the early innings of generative AI. The technology is still relatively new, and many companies across many different industries are still in the process of laying out their own AI roadmaps and how they could improve their businesses. Since forever, it only really hit the mainstream after OpenAI launched ChatGPT in November of 2022, shortly after Microsoft meaningfully increased its investment in the startup and began incorporating AI into its products. Since then, the AI race has been on, with numerous big tech companies looking to get in on this next big technological advancement. This is encouraging for businesses like Nvidia, which assists in the development of AI technologies. Demand for Nvidia's H200 chip and its recently unveiled Blackwell architecture far exceeds supply, and this could persist well into 2025. At this point, we can say that the only thing preventing Nvidia from selling even more GPUs appears to be supply constraints, as its semiconductor manufacturing partners, like TSMC and Samsung, look to increase production capacity to keep up with the demand. This is another reason to be bullish on Nvidia. Lastly, we must remember that despite Nvidia's enormous stock price gains over the past few years, the stock is still relatively cheap, trading at about 45 times forward price to earnings, which is much below the valuation at which the stock traded a few years ago. Given its proven growth and the numerous opportunities still facing the company, the stock is cheap, and this is another reason why investors should think about purchasing Nvidia stock as soon as possible. What do you think about Nvidia stock? Is it a buy at the current price? Please share your opinions in the comments below, and remember to let us know how much you think NVDA is worth. Dominant force. The company's innovative prowess, reflected in its cutting-edge GPUs and strategic acquisitions, positions it to capitalize on the burgeoning demand across various sectors, from autonomous vehicles to data centers. Nvidia's strategic moves, such as expanding its presence in the AI and cloud computing markets, and its collaborations with major technology firms, further solidify its path toward unprecedented growth. The anticipated surge in the adoption of AI-driven solutions, coupled with Nvidia's robust product pipeline, suggests that the company is well equipped to navigate and thrive in the evolving technological landscape. This forecast, while ambitious, highlights the market's confidence in Nvidia's ability to not only sustain but accelerate its growth trajectory. Moreover, the broader implications of Nvidia reaching a $5 trillion valuation extend beyond the company itself. Such growth would signify a major shift in the tech industry, showcasing the increasing importance of AI and related technologies in driving economic value. It would also reflect a significant shift in investor sentiment, favoring companies that are at the forefront of technological innovation and digital transformation. However, it is crucial to consider the potential risks and challenges that Nvidia may face on this journey. Market volatility, regulatory changes, and competitive pressures are factors that could impact the company's growth prospects. Investors must weigh these considerations carefully against the optimistic projections. In essence, the $5 trillion forecast is a bold testament to Nvidia's potential, emphasizing its strategic vision and technological leadership. Whether or not this ambitious target is realized, Nvidia's trajectory undoubtedly points towards a future where it continues to shape and define the next generation of technology.